Ladies and gentlemen, good day and welcome to the Bank of Maharashtra Q3 and 9 months FY22 earnings conference call. We have with us from the management, Shri A.S. Rajiv, Managing Director and CEO, Shri A.B. Vijay Kumar, Executive Director, Shri Ashish Pandey, Executive Director, Shri Vijay Srivastava, GM, SMA, CFO, Shri Prashant Khatapkar, GM Recovery, Shri Sanjay Rudra, GM Corporate Credit, Shri Vijay Kamble, GM Planning and Marketing, Shri Vallabh Kolatkar, GM Inspection, Shri M.A. Kabra, GM Agri, Shri R.S. Bansal, GM HRM, Shri A.S. Kabade, GM Cremon and IRM, Shri Divesh Dinkar, GM IT, and Shri Suryakant Sawant, GM MSME and Retail. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Shri A.S. Rajiv. Thank you, and over to you, sir.
So, good afternoon, my dear participants and analysts. And first of all, thank you so much for having participated in this conference. And we are glad to see that our board is adopted this reviewed financials, our results for the quarter ended 31st December and 9 months ended 31st December 2021. A glance of results, though it is already published, with your permission, I would like to have a glance of the results at a glance. The total business of the bank increased by 18.27% to 3,15,000 crores, and total deposits up by 15% to 1,86,600 crores. CASA increased by 25% and reached a level of 55.05%. Gross advances increased by 23% to reach 1,29,000 crores, and gross NPA declined to 4.73 and net NPA reduced to 1.24%. Provision coverage ratio improved to 94% and net profit up by 111% to 325 crores. Operating profit grew by 28% to 1,162 crores. Net interest income increased by 17% to 1,527 crores. Net interest margin improved to 3.11% and cost to income ratio improved to 46%. ROA at 0.6% and CAR improved to 15%, of which Tier 1 is 10.61%. So the profitability of the current quarter is improved by 110%, and operating profit also has shown growth of 28% year-on-year basis. Net interest income is also grown 17%. Net revenue also is improved by 14%. Fee income is increased by 6.51% year-on-year to 305 crore. Basically, the fee income is slightly lower as compared to earlier years, because last quarter our fee income, one of the component of return of account, it was 305 crore. This quarter it is 105 crore, 110 crores. Number two is that the yield is slightly hardened. Because of that, our profit on sale of investments has come down to 100 crores from earlier 168 or 170 crores. So this is the two main components. It has brought down the growth of net non-interest income. Cost to income ratio improved to 46% and as against 52% corresponding last quarter. ROA and ROE is also comfortable. For 9 months also, net profit is increased by 107% and operating profit is shown a growth of 52%. NII growth is 26% and net revenue is grown by 34%. Fee-based income increased by 21% and non-interest income is up by 53%. Cost to income ratio for 9 months is 44% and ROA is at 0.42. Asset quality is like further improved. The total business grow at 18% and the same is up only 6% for last quarter. Total deposit up by 15%, gross advances grew by 23% and net advances grew by 25%. RAM sector is grown by 18%, MSME is at 24% and retail advances at 19%. Capital adequacy ratio at 14.85, of which Tier 1 capital 10.61 and liquidity coverage ratio at 210%, and bank has issued Tier 2 bond of 1,000 crore in October to LIC of India. Asset quality is declined to 4.71% as of 31/12 as against 7.67% 31/12/2020. Net NPA is reduced to 1.24% as against 2.59 corresponding last year. Provision coverage ratio improved 94% and bank holds cumulative COVID-19 provision of 1,073 crore as of 31/12/2021. These are the main glance of the business performance. According to me, out of this, the performance is likely the bank's restructuring portfolio is increased. It is true that amount outstanding is corporate sector is 1,117 crore, retail is 2,427 crore and MSME at 2,503 crores and agriculture at 563 crore. Totally 6.6% of the total outstanding is under the structured portfolio. But this portfolio we are monitoring because this is as per government guideline. Other than this, corporate is as per along with other banks we have restructured. Retail is 2,427 and MSME is 2,500. Out of that, SMA 1 and 2 is coming only 10% of the total portfolio, that is coming around 600 crores. Generally 2 to 3% of the SMA 2 is slipping quarter to on quarter, and as of 9 months, totally 110 crore is slipped during the 9 months period. So though the amount is slightly higher as compared to the balance sheet figures, we are very comfortable that 1,100 crore COVID provision we have kept for this if any untoward incident is happening. Otherwise also the portfolio is doing very well and we don't envisage any kind of issues for this portfolio. And another asset classification wise portfolio is that SMA 1 is totally around 3,200 crore and SMA 2 is 1,700 crores. So this is also under control. Though it is slightly as compared to December 20, slightly it is increased because December 20 was because of the moratorium. There was no classification, but otherwise this asset quality is under control. So this there was a all-round growth in all the areas of the bank for the last 1 year period, and most of the ratios are improved. And this advantage is grown basically by around 25,000 crore is increased. The main growth was around 7,000 crore from corporate and the remaining from retail, housing loan, MSME sector. This corporate also, so 5,000 to 6,000 crore growth was mainly on account of government guaranteed accounts of around 4,000 crore, which was earlier sanctioned by the bank previous year, and the utilization is happened during the current year. So the other major growth is mainly MSME sector. We have certain schemes like contractor schemes, GST schemes, and hospital area we have grown. Otherwise, asset quality is concerned, and we are very comfortable position that. So in September, more than 300 plus account actually we have return of accounts are there. So and the recovery is more than 5,577 crores. So the gross NPA as net NPA brought down. As well as slippage ratio, if we concern, the mainly agriculture area it is 282 crores, MSME area, MSME is 185 crores, and the retail is 73 and other sectors 37 crores. It's a 577 crore is the slippage is happened. This is a split up of total portfolio. So if you have any points to discuss that, we can have that one-to-one individually. We will discuss that. As far as capital adequacy is concerned, also bank is very comfortable position, 14.85%, and bank is intending to have 500 to 750 crore QIP for next quarter. Most probably before February 15th, we may raise this, and next year as and when. And bank is done in the three portfolio analysis under severe stress condition also. We have analyzed our capital adequacy requirement will be around 500 crore in 2023. So, and current year capital profitability is not considered. It is whatever the amount is there, and COVID provision of around 1,100 crore also. Capital is concerned, it's a very comfortable position. Though capital is not raised also, position will be comfortable for next 2 years. So this is the area where I wanted to discuss with you, and if you have any individual questions, I am happy to take up one by one question.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Jai Mundra from B&K Securities. Please go ahead.
Yeah, hi, good afternoon, sir, and thanks for the opportunity and congrats on a good set of numbers. So I have a couple of questions, sir. First is, you have, it looks like the 2Q numbers have changed, particularly on other income and provisions. Is this that you have reversed the, as per RBI guideline last quarter there was income from recovery of TW accounts was supposed to be debited to the provision line item. Now you have reversed that, right? Is that the reason why other income and provisions have changed in 2Q?
Yes. We have done as per RBI guidelines for last quarter, and the third quarter RBI changed the guidelines, so we have reversed that.
Correct. So that is the only reason, right? I mean, you come to the, yeah. Right, so that was the only reason, right? I mean, other income and your maybe MTM thing on provisioning. That is the reason which has led to the reclassification.
Correct.
Okay, understood. And sir, if you can highlight what was the recovery from TW account last quarter, some 300 crores, right? And what is it in this quarter?
140 this quarter.
Okay, understood. And now, sir, on second thing is your note to account 16, which says that you have acquired some certain standard assets, and you have given some more details there. Is this co-lending thing? I mean, is this the detail about co-lending that you are doing with other NBFC, or this is something else? I mean, part 2. Note 16, part 2, wherein you are saying that you have acquired 3,300 crores of loans.
Yeah, this is
actually pool purchase actually. Co-lending is also there, 500 to 600 crores, that is different. This is the pool purchase what we have done from some NBFCs. Okay, and this kind of a detail is required from this quarter onwards, right? Because I think it was not there in the previous quarter. Yes. And it is better transparency level, it is better to give us giving more details is always better actually for information of the stakeholders. Sure. So this is for 9 months or this is for third quarter? I mean, this 3,300 crores of pool purchase, is this happened in third quarter or this is like 9 months? Yes. Right. So these are mostly retail, your home loan. What kind of a pool purchase is that, sir? If you can provide some more clarity. We are gone for full purchase of average duration of below 2 years period. And about 2 years, we have not gone for that. And this is all 18 months to 2-year mark. And this is basically for MSME, micro, and can be classified under a priority sector.
Okay. But I think that you would always anyway be priority sector surplus, right? So what is, what is the, you are anyway PSL positive, I guess, right? Or was that not the case?
Yes.
See, there is an opportunity to earn in this. Actually, two aspects. One is, yes, as you rightly observed, priority sector lending is quite robust in our bank for the last more than 18 months, for 6 quarters. Previously, once upon a time, we used to buy shortfall from the market, and now we are excess or on an average of 43, 44, 45%, and those excess priority sector we are selling it to the market, and we earned substantial amount in the last quarter. If you see the non-interest income, if you look at it quarter on quarter, we did not get a good income in the treasury due to the yield is getting hardened. But at the same time, it was compensated with the PSL sale. Precisely, we say around 180 crores we could make in PSL sale. And apart from that, this PL sale and the commission we get on that, we also get a good pool account with a quite good margin, and the track record is good. So we thought as a calculated move to have both, take both advantages. That is how we are going about it, pool account. It's not to meet the priority sector target. We are already comfortable. We continue to do this on selective basis to take both advantages.
Understood. And just to understand the risk here, so hypothetically, let us say if this account were to slip, what is your recourse? Would the pool originator will pay you in full, or there is FLDG, or how does it work? Because they have retained some 10%, right? The originator.
So this is true sell basis, and we have recourse to the directly borrowers. These are mostly the small borrowers, and our experience with these companies are that whatever the loss estimates are given by them, they usually maintain, because their recovery process is very strong. So they maintain within their loss estimates which they are giving in the beginning of at the time of disbursement only.
Okay, so if there is any delinquency in this portfolio, this is true sale, so you will have to account for provisioning by yourself, right?
Yes.
Understood. Great, sir. And just other thing, sir, on asset quality, right? So as you said that while SMA 1-2 has gone up marginally, but your slippages, last quarter I think there was one large account in agri related sector which was some 500 plus. So if you remove that, then the slippages have actually increased, few basis. Why would that be? If you can help explain that.
Yes, this slippage is marginally increased in this Q3, 377 crores. It is mainly the small accounts, agriculture and MSMEs. Of course, it is not significant. So we are keeping all track and follow continuously. So we expect that this trend will remain because of this some COVID impact of this pandemic scenario was there during Q3 slightly. So 577 is there mainly for agriculture and MSME.
Thank you. Mr. Mundra, may we request that you return to the question queue for follow-up questions. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Nikhil Vaishnav from Haitong Securities. Please go ahead. Mr. Vaishnav, your line is in talk mode. Please go ahead with your question.
Thank you for the opportunity, sir. I have just one question. Just wanted to know, sir, how we do stamping of NPA. It's on daily basis or monthly basis?
It's a daily basis stamping.
From 1st May 2021 on daily basis.
Since when we are doing this? Sorry.
1st May 2021.
Okay. Yeah. That's all from my end.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Ashfaq Ahmed from A Square Financial Services. Please go ahead.
Very good evening, everyone. Many congratulations, sir, for the wonderful results across the parameter actually. So I have one question, means though the corporate book has also shown a very healthy uptrend as far as the disbursement is concerned, and the slippages also, we are matching actually of the retail. So, we are bang on, sir. Just I have a small question on the MSME book. So we have shown a very healthy growth in the MSME quarter-on-quarter, year-on-year also. And what is going to be the trend? Because we have increased our footprint, we have increased our branches, and we have added new zonal offices also. So do we expect that this trend in the MSME book is expected to continue? And what will be the trend? Not exact number, but how will be the trend for the next year or so? Thank you, sir.
It's a good question. See, MSME, we have been doing very good quarter after quarter. Yes, this trend will definitely continue, and we would like that trend to continue. We got a lot of things to say. It is not a one-off transaction or one leg, because a lot of things we have undergone this MSME. Basically, we brought many new products to suit to the requirement of the user and the borrower specific. That has changed the profile one. Second, that we have created many verticals to give a focus this MSME. Then we formed a cluster-based approach, and our general managers going to the reach to the level to the cluster, meeting the local CA, whatever the industry body, and then sourcing the new proposals with the new products available in hand. That is all through the credit outreach program is what happened. Apart from that, we also know pool account also to some extent it is a little bit increase our portfolio to be frank with that. And then you can also appreciate that it is the fact that ECLGC government has come to the COVID. To some extent, some percentage has increased the portfolio. That is also one factor. And apart from that, if you look at it, our bank, our base is less. We have just started from 18,000 crore from the beginning of this year. We got to 23, and it is 25,000 crore, 25K. And we are targeting 30,000 crore by 31st January. And we are doing it in a focused manner. Primarily, we are focusing on our existing customers who need the fund, and to the customers who were with us have gone. Those customers we are focusing with all this kind of different approach. This trend will definitely continue, and is also a focus area of the government. Apart from the MSME is a very broader term. We have microfinance and Mudra loan also to be added. In that is also substantially increasing at the bottom line. So altogether, if you see that the MSME growth was consistently growing, and it will continue this trend for next couple of quarters at least the same level, maybe 30-35% plus and all, not sustainable long run, but at least a couple of quarters will increase. We'll have this kind of trend.
Do we expect that because we have added new zonal offices also across the pockets, and we are the only bank who has opened more than 100 branches in the last around 12 months, which is very significant numbers by any given standard. So do we expect that this increase in the footprint also will help us in addressing the slippages and more one-to-one meeting and with these customers and containing the slippages in this segment?
Absolutely right, and that is one of the main area where the very purpose of creating a zonal office to have a compact number of branches will be controlled by the zonal office, and the decision also will come forth. Apart from that, I would like to add that we have analyzed internally out of 2,000 branches, on an average only 1,000 or less than 1,000 branches were contributing. Now we have increased the number of branches started lending, not only MSME, even other sectors like retail and agriculture. The number of branches started lending increases, and we have not even reached the optimum level. We reached the level of 80, 90 level. That kind of level becomes the percentage of credit and CD ratio will keep on increasing. Your observation is correct. Not only that new branches opened, new zones opened, and existing branches which we are not doing, which the credit CD ratio or some of the To be frank with you, in Maharashtra, our CD ratio is very less. As though the 120, 60% of the branches outside they are doing it well. So we are improving that CD ratio branch-wise, zone-wise. We are focusing.
Okay, thank you so much for answering my question. Again, congratulations to MD sir and the new editor who has joined, Mr. Pandey, and the team of Maharashtra. Thank you so much, sir, for giving me the opportunity to ask questions. Have a wonderful quarter 4 as well, sir. Thank you so much, sir.
Thank you. Thank you, Ashwin.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Mahesh MB from Kotak Securities. Please go ahead.
Good afternoon, sir. Just in your initial comments, you had indicated a reasonably sharp growth on the corporate side led by a government guarantee scheme. Could you just elaborate that? And also, the sharp growth that you saw on the corporate side, was it a very back-ended growth that you reported for the quarter?
Our GM Credit, Mr. Rudra, will respond that.
Yeah. Good evening. See, in the 9-month period, we have grown in corporate substantially, but some of the things are already sanctioned accounts which has been disbursed during the current quarter. Though we have grown in almost all the industry sectors, but major growth has happened in the infra sector, where our growth is around 8,700 crore. But these are mostly of the state government-owned entities, and this entire major amount is state government guaranteed advances. So this is one area where we have grown well. In addition to that, our growth is in the textile sector also. Since textile was doing well, we have taken some of the mid-corporate advances in this sector. And as the steel sector has also started improving, some of the renowned companies in the India where we have taken few of the exposures. And chemical also we have taken some exposure. So granular, if we go, we have taken the exposure in all the smaller, and most of these are in the mid-corporate segment. And infrastructure, wherever we have taken the major exposure, is state-owned company and backed by the state guarantees to the extent of 8,000 crore.
Sorry, just to clarify, sir, this exposure that 3,000 crores that you have from the state government, this is what it's what towards the discount side, or is it a non-discount kind of an exposure?
It is a mix. We have not taken much in the discount side, though power sector we have taken, but these are mostly the transmission and Genco side. We have taken some exposure in the road side also, the state-owned roads also we have taken the exposure, and other infrastructure also we have taken, which are the irrigation projects, the state-owned companies. Irrigation projects are there. Few of the irrigation projects we have taken. Some of the urban authority also, where for the developmental projects we have taken, like the Greater Noida, Delhi Development, then Gamada and all these authorities, we have taken the small exposures.
Sorry, just to clarify this exposure that you see, the reason we are asking this question is that there was a very big uptake in credit in the last fortnight of December. Just trying to reconcile, was this a very large exposure at a system level as well? This uptake that you saw in credit from the state government related exposures, or was it specifically only for you?
No. These are it is spread all over India. It is not concentrated on any particular state. This is spread over all over India, and these are not very high value exposure. Since as a policy we don't go for very high value transactions. Most of the exposure are within 1,000 crore limit only.
Sure. Okay. Sure. My last question is essentially the NARCL, any progress on where we are on that on the development on that one?
Come again?
NARCL.
NARCL now in this quarter that functioning will start, and the first list we expect that we have 4 accounts, 1,400 crore. They are shortlisted, so that will be transferred to NARCL.
This quarter, is it?
This quarter.
Okay. Thanks a lot.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Mahrukh Adajania from Elara Capital. Please go ahead.
Hello, sir. Good evening. My first question is related to what Mahesh asked. Basically, the banking sector saw a very huge growth in credit in the last 15 days of December. So for you, which sectors grew in that period? In the last 15 days of December, did you see your credit growth being faster than the rest of the third quarter? Was there a lot of MSME lending in the last 15 days, or was there a lot of infra lending?
Last quarter, the growth was throughout all the 3 months. But in the last month, usually being the quarter end month, the offtakes are always on a higher side. We had started our MSME outreach. If you remember that post-COVID, the situation improved and we started our MSME outreach. So this field work which we are doing from the month of October, November, that started giving result in December. So in December, our MSME growth is quite good. And also we launched few schemes for the retail also. We started with the retail, our housing loan rate we reduced to 6.40. That also has given a very good response for the retail segment also, in housing as well as MSME. This was further added with our corporate credit. Some of the sanctions were given earlier, but the disbursement, since the government guarantee was not received in the earlier period, and the moment we received the government guarantee, disbursement has happened. So this has also resulted into sudden increase in the advances in the last month of the quarter. So overall, our growth was good for the December quarter.
Madam, I'm Vijay Kumar here, ED. I would like to answer your question in a different manner. I could get what you said, that last 15 days or something you said that. I'll tell you. But you look at it in a different manner. If you look at last 3 quarters, our average advances steadily increasing. If you look at Q1, it is around 93,000 crores. And in Q2 average, it was around 1 lakh crores. And then if you see Q3, it was around 1,10,000 crores. Okay, 1,15,000 crores. So, yes, every quarter I know there is a market trend that will push the persons who are sanctioned limit to take the call to delete. That will be a timeline for everyone, even for the person who are lending as well as for the persons who are availing the facilities. So that is how it will be at 2 to 3%, sometimes 4% varies. Otherwise, if you look at the average, we have done extremely good. That is how our earnings also, yield in advance also earned good.
Got it, sir. Thanks a lot. Sir, I don't have any doubt on your traction and loans. So it has been consistent. I was more checking for the sector. So obviously you can't speak for the sector. You could speak only for your bank's contribution to the sector. So I just wanted to know that in the last 15 days, which sectors more? So probably MSME and infra, correct? So of course, throughout the quarter you have lent, but in the last 15 days, it would be these 2 sectors, right?
Madam, I am Ashish Pandey here. See, one more clue to it, which is also a fact that, if you take the private sector side on the MSME and the business, or maybe the corporate, or the second one, on the state government and this. So both put together, because when there is a mindset towards the third wave, people started utilizing and building up these stocks. That was point number 1. So certainly utilization will be more in general also, not only the term loans, but the other way around. The second one is that this busy season is now, and the only 4 months are remaining. Most of the state government and central government have to clear off the budget. And certainly when the elections are on, certainly to complete the project and make it through as early as possible is also one of the gestures. So I think this couple of things put together is supporting the environment for the disbursement.
Okay, sir. Thanks so much. And sir, today there were some press articles that the banks have written to the government through IBA to extend the restructuring scheme and to also extend the moratorium on previously restructured loans from 2 years to 3 years. So IBA has written to the government or to the FM on behalf of banks. Now, given that asset quality is improving for you and other banks, why would banks be doing this, asking the government to extend restructuring, etc.?
Why? Because this is a third wave. There are some of the area like hospitality sector and some of the sectors are struggling. Still, issues are there. So cash flow is affected, especially in case of MSME and retail. So some of the banks is of the opinion with different banks asset quality will be differs, and some of the banks have raised this issue and they are taking up with the government, and government also I feel like that they are positively responding, because third wave also another 2 months, 1 month it may impact the asset quality generally. So this restructuring window may be open for another 1 more quarter. This is the request given by some of the banks. That is what I said that.
Got it, sir. Okay, sir. Thank you so much.
Thank you.
Thanks a lot.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Ashoka Ajmera from Ashcon Global Services. Please go ahead.
Thank you for giving me this opportunity, though little late. Many of the questions have been answered. Sir, at the outset, Mr. Rajiv sir, Ashish Pandey, Vijay Kumar ji, congratulations and compliments to your entire team of the top brass in the bank and the staff also for the fantastic results. Though the operating profit is a little under pressure, but if you see the end result at the end of the day, is very good. All the your ratios are, your gross NPA has for the first time after I think many quarters have come down below 5%. Net NPA is also very comfortable. Having said that, I have got some small few questions and observations. Number one, on the profitability, that the miscellaneous income has come down from 415 crore in the last quarter to 192 crore. Of course, you tried to explain it in the initial talk, but what could be the exact reason and what is the way going forward? I mean, we can have the assessment about it. Similarly, on the profitability only, these other expenses have suddenly gone up to 207 crore from 119 crore in the last quarter and 121 crore the previous quarter to that. That is the, I think, the June quarter. So is the trend of 100 crore additional expenses in the other expenses going to continue, or it is some one-time this thing? So this is something on profitability, and also connected with this is on the income tax provision. Like we have so far not decided whether we are going into the new regime of the taxation. But if you see the last 2 quarters, the provisions were almost about 250 crores. Now suddenly we have come down to 86 crore of the provision. So some comment on that going forward for the remaining 1 quarter which is left, what could be the kind of the provision on the income tax? These are the some questions on the profitability front, sir.
Our CFO will answer that question, all the questions. Yes.
Regarding other income, that if you are comparing our September quarter to December quarter, so in September quarter we have one exceptional income because of that 31 crore we received in recovery of account. So if you exclude that, so the income you can compare that from quarter to quarter, and I can share with you that we have been getting income from various streams. One of the streams is that sale of PSC certificates. You know that our priority sector we have already surpassed the target, and we have been selling PSC certificate, and I can share with you in 9 months we got income of roughly 188 crore, and whereas in this quarter it is 46 crore. And recovery efforts we have continued, and recovery return of account we got in quarter 141 crore in income. So this is it. Second question is regarding that expenditure. So expenditure, I can tell you that Sahab has already told that 1,073 crore we have made a COVID provision. Out of that, 170 crore for 9 months we have created from the other expenditure. So we have made provision for expenditure 171 in respect of increase in COVID pandemic, and 45 crore we have made in this quarter. This is the reason for rise of the other expenditure. But this is only we have made estimation, and if any expense comes, it will be incurred. Otherwise, it will come back to profit and loss account. It is nothing that carving off the profit, and again it will come back.
On taxation front?
Pardon?
On income tax front?
Taxation front, that since we are having the huge unadjusted losses. So whatever taxation we are making MAT provision. though bank they has taken a stand that MAT is not applicable, but since our tax and auditor told to separate time make the provision, so we are making the MAT provision and we are also taking the credit. So it's a in probability it is tax neutral.
Okay, sir. In the case of if you see the gross advances and net advances, and if you see the gross NPA and net NPA, finally there is a difference of 21 crore. You see the difference between the gross and net NPA is 4,560 crore. And if you look at the net advances and actual advances, there is a amount is 414581. So what is this 21 crore could be? Is there any spillover of some other heads or something in this? Some investments or something?
Maybe some kind of DICGC provisioning and other provisions held in the accounts. So whenever if you are going for net advances, this in addition to other provision, this DICGC provision or ECGC provision, some kind of provisions also small amount will be there. That may be the reason.
Yeah, that DIC settled account amount is there that we are netting off.
Yes.
Okay. Sir, now coming to the advances and the credit this thing, sir, SMA 1 and 2, if you look at the slide, the figures are quarter by quarter is increasing. March quarter 3,600 crore, then June quarter 3,600, September 4,400, and now 5,300. So do you see the trend continuously going forward? The SMA 1 and 2, especially SMA 2, also accordingly going, the overall figure going to 6,000 crore in the next quarter, or SMA 2, and you said that only some 2 or 3% of SMA 2 turns out to be, if I have heard you correctly, is that correct? That only 2 or 3% of the SMA 2 turns out to be the slippage or NPA?
See, as far SMA as of now, it is SMA 2 is 1,672 crores. And corresponding figure of December 20 was more than 3,000 crore was there. That means SMA 2 has come down to 50% of corresponding year. And in case of SMA 1 also now it is 3,600 and that is also almost 50% of the corresponding earlier year. That means according to us these figures are coming down. What I was talking that in case of restructured advances, the present SMA out of the total SMA, in case of restructured advances, SMA 1 is 228 crore and SMA 2 is 155 crore. So 383 crore is the total figure out of 6,000 crore. That is what I wanted to tell you.
And sir, on the NBFC front, what is your exposure on in the NBFC space, and how are you looking at this space, especially when you are going for now co-lending and also buying the pool like you bought for 3,302 crore? What are your views? Your views are positive on NBFC front for the onward lending as well as co-lending? And what is the book says on the NBFC front?
Total NBFC exposure is around 12,000 crore, which is less than 10% of our total advances. We have a certain NBFC policy, and accordingly policy-wise we move as far as the NBFC sector is concerned. In the previous year, actually, there was certain stress in some of the microfinance agencies and NBFCs, which was taken care through the PCGS guarantee, PCGS guarantee which was given by the government. So some of the financing has been done under the MFI scheme also, which was announced by the government. And definitely NBFCs are one of the very important wing of financing in the industry. So we are selectively, we are definitely based on the strength of the NBFCs. We are onward lending, we are financing to NBFCs also, but that is selectively based on the strength of the.
I understand. Thank you, sir. You said that you have now relooked at the textile and steel industry, that they are doing very well. Similarly, are you also looking to have a relook on the construction industry, the loan to some good quality builders for the construction of the residential houses and other things on that? Any liberalization in your policy going forward? Because that is the thing which will bring you some credit growth, I presume.
As you rightly said, the real estate is also doing well now. It has started doing well, but still it is not very stable condition is not achieved. because only few quarters the offtake was good, but again in the December end, the situation was not very good. Again with the Omicron, we don't know what is going to happen with the industry specific to real estate sector. But as you rightly said, the situation is improving, the real estate is doing well. So we are also we are closely monitoring the sector, and at the right time we will take entry to that sector also. But for the time being, we are very selective as far as the real estate sector is concerned.
Okay, so my last question is on the capital front. You said that you already raised that 403 crore of the capital, and now you are again 10,000 crore of Tier 2 bond, where you are again planning for a QIP on the equity. Sir, do you think that if you are comfortable on the capital adequacy, do you think this is the right time when the stock is so low as compared to your performance? And you are, I think, probably maybe among one or two banks who have grown with this speed, even though your base may be low. But I don't think you are anymore a small bank now, as people used to feel. It's a fantastic performance. I'm going for 30% and 18% kind of a growth. So do you think it is the right time to raise equity at this level of 20-21 rupees of a share price? Is it worth doing this exercise, or you look at some other alternative?
Sir, I look at it two different manners. See, as you rightly said, bank is very sound, bank is progressing, and you appreciated that you may be in our top notch to banks in terms of growth and quality. And your question is very valid, whether we'll able to rise up when the good quality of amount in equity when the market is so low. Sir, we never look at it the way, when the market will come, when the market will increase, that point of it will come, may not we get the opportunity. The persons who are investing, we also take it in a manner that if you invested, if you believe in this time and invest it, you will also get benefit in the future. There is a benefit go to the investor for a long term. We would like to have a set of stakeholders for a long player. And if the person who has have a faith in this, this is the right time to invest. No need to wait for the future. I think the seasoned investor will definitely invest, and this time we are confident about it. We'll able to rise. Of course, as a bank, if you look at it, yes, the equity amount will be less when amount to be raised about this time maybe less, but we have to every day we have to rise up. We cannot wait till that time to come.
That's very good, sir. You are thinking. That's very good. You are thinking of the interest of the investors, and we are also guiding basically the investors only. So all the best to you. Thank you very much, sir.
One more thing I would like to tell you. You tell me for the last 4-5 years whether any bank has paid dividends. Nothing. At the same time, we have faith, and let us have a faith that this is the right time to invest. One day other bank will go, and Bank of Maharashtra, as you right have said, no more small bank. The time will tell that Bank of Maharashtra, the person who invested, leaps and bounds not only in terms of the rise in the price, and also the earnings every year after year they have dividends. We have confidence.
No, sir, rightly said, sir, but there is a saying, jungle mein mor nacha kisne dekha. Sir, you have to make it yourself little more visible in the market, in the whole pan-India basis, to the investing community as well as the analyst community. I think there is still a lot of scope for you to present yourself properly before this investing community and the public at large.
Appreciate point. Thanks for that. We really need that kind of feedback from the investors. I appreciate. We really do it.
That's why we have been coming to the market for the QIP in a small size, so that we want to invest our performance also, as well as that whenever we are raising the capital, it is for the growth capital.
No, we fully support you, sir. We fully support.
Thank you, sir.
Thank you.
Thank you. The next question is from the line of Akhil from Robo Capital. Please go ahead.
Hello, good evening. So I just want to know, could you give us any guidance on the credit cost for FY22 and FY23?
We have not given any guidance, sir, because approximately the percent that trend will be are of the opinion this percent trend will continue. At quarter on quarter around 500 to 600 crore, or monthly around 200 crore slippage we are expecting that. That means around 0.5% per quarter is a slippage rate now. But since this slippage is happening daily basis, and more than 60 to 70% recovery is happening the next month. So the lag is there for 1 month. That is the important thing. For example, some of our friends have told that currently that slippage rate is more because out of 577 crore, 268 crore slipped during the December because we could not able to upgrade the account and we have not upgraded the account because quarter end is over. Now that recovery will come, upgradation will happen during the current month. So the real recovery rate of earlier in the banking system maybe 10 to 15% or 20% was the recovery rate. Now it is come to 50 to 60%. So we are sure that, but the net impact will be, though 577 or 600 is added, net will be not be more than 250 to 300 crore per quarter. So almost I think that 1 to 1.25% credit cost will come.
This is for FY22. I'm going ahead.
Yes.
Okay. That's it. Thank you, sir.
Thank you. The next question is from the line of Sushil Choksey from Indus Equity. Please go ahead.
Congratulations to yourself and the team for stable performance and guiding well. That's one basic question. What purpose of doing QIP? Is that government holding down from 90% to 75%?
Your audio is not clear from your line, sir. Please use the handset mode.
Yeah, no, I'm answering, not on the speaker, I'm on handset. Sir.
Yes, sir, we could able to get you your question. Yes, at present we have 91% of government equity is there. As per the present norms, I think within 1 year we have to bring down, but every year every year extension is giving. But over a period of time we may have to bring down to 75%. So at least we are thinking that 5% range and different modes we can reduce this. That is what we are thinking that.
Sir, I have a suggestion if you can accept or discuss at the board level or ministry. Why don't you reduce our 1,000 crores of equity, convert into a preference share or tier 1 bond or buyback from the government at the price which they issued, which is below our current market price. Government would be happy to receive 7-8% interest or tier 1 bonds with the maturity of 5 to 8 years. And a capital reduction will happen, which the market would appreciate. The stock market will also reward because you will be innovative and the market will reflect the positivity of the approach because the Bank of Maharashtra is on a roll for growth with profitability and other parameters.
Yes, we will see that what best we can do because convincing government also it will take a little time. So once the banking sector is stabilized, I think we may be able to convince them.
Sir, but if you do it now, other banks also will get the benefit and see that Mr. Rajiv and team at Bank of Maharashtra has done something innovative and this is effective. When we are taking Tier 1 capital at 8% from the market and if you are able to convert your equity at 8%, this would be a cheaper option than diluting in QIP at the current market condition. When you are doing so well with a CASA at 55%.
Yes, we will see that your suggestion that how to work it out.
Good suggestion, Sushil.
And secondly, you have been speaking about co-lending a lot of late in the press and we are the largest growing PSU bank irrespective of the base size. Can you tell me what is the co-lending numbers we have achieved in last 6 months, 9 months?
Sir, we have entered into a co-lending tie-up with the 12 company and the present sanction and disbursement is around 135 crore as of 31st December. Sir.
What are the target if you take 1 quarter or a 1 year basis, if co-lending would generate what kind of book?
We see initially we don't have any digital platform for co-lending. Gradually we developed that digital platform. So now it is more focused and speedy disbursements and sanctions are happening. So we are targeting at least 500 crore by March end.
Second, sir, why is the effective tax rate much higher than the system?
Effective tax rate.
Pardon?
What is the effective tax rate and why are we paying so much of tax when there is accumulated loss of 7,500 crores of the previous 3 years up to FY19?
we are not paying the tax that only on the safer side we are paying the MAT, but side by side we are taking MAT credit also. So there is no impact in profit and loss. And that we have made some DTA reversal also. So that DTA reversal has also helped in strengthening our the capital. So there would be no impact of the tax liability in the profitability. Okay, sir. Whatever we are paying back, we are going to get back.
Basically, what is the estimate of reversal of tax in your assessment?
Pardon?
What is the estimate of reversal of tax amount?
Yeah. I can share with you that since we are having the losses, and that losses it is being carried forward. So whatever the current income is there, current tax liability is coming, it is set off against that losses. So going forward for another two years, we are not expecting any tax liability.
My last question to the management team. Sir, what is your guidance for FY22 in terms of CD ratio, NIM, ROA, ROE?
We have guidance means in CD ratio, our present CD ratio is 67-68%. And we wanted to reach at the level of 75% CD ratio. This is the one guidance CD ratio is concerned. But most probably by March we may be able to grow 70%. And by next within 6 to 9 months time we will reach the 75%. We could be able to shift at least 15 to 20,000 crore investment from investment to advances side. Second point is NIM. We wanted to guidance is always we wanted to be above 3%. And as of now ROA we have reached around the 0.6 and we will try to reach 0.75 at least.
Okay. And looking at CASA trajectory, you think this will be sustainable or this will go further?
CASA is sustainable, but we are not looking for further increase or because this I think we have already reached the maximum level. We can able to increase by another 1 or 2% over a period of time, but percentage wise is I think 55% is a good number.
Seeing our CASA number at such a high percentage, I've seen you growing from 45 to 55 in your tenure itself, or even from 40 to 55. Why is the consumer banking income or consumer products, marketing or cross-selling so poor, whether it is a housing loan or a education loan or car loans or personal salary loans or gold loans, whatever loans you are talking about? Why is that our market share in that business is so low compared to competition when our CASA is supporting our business?
Yes, sir. Sir, this is a good observation. See, this CASA has been increasing for the last 3 years steadily, and in the same time period, our share of RAM also increased, and it has been increasing, but not in the same proportion. I fully agree.
I'm talking purely consumer product. RAM,
I fully agree, sir. I fully agree with you. That is the one where area we are focusing for the last at least 6 months. This is the more search area in next 2 quarters. And we already diagnosed and we know the thing number-wise, customer-wise, who is having accounts, who is having how much CASA is average per 5 lakhs and above, 1 lakh and above, average balance over the year, numbers, branch-wise, vis-a-vis whether they avail a loan or not, whether ET is going from the account or not, all these are mapped now. We are focused in a very, I can say, surgical manner. This answer will give by way of results in the next another 2 quarters.
Sir, the mutual fund industry and broking industry or any of these products which are distributed by other banks, banks like SBI earns 450 to 500 crores, other banks do. There are so many saving accounts linked from our bank, but we don't get any income because we have no tie-up for any of these products. You may not tie up with any bank-led brokerage house or a mutual fund, but you can always tie up with other places because when your CASA is high, your income could have been generated much higher. They're letting that income go free to others.
We are working on that and our department is working on that. Different other agencies also, they are working that. I am sure that this cross-selling area, earlier, of course, what you are telling is correct. Earlier, this cross-selling numbers was 1.2 to 1.3. Now it is almost changed to 2.5 to 2.6, I think. So, and as of now, this insurance business, all these things, we are getting some small percentage, maximum 40 to 50 crore only profit is coming. So we are working on that. We will do that.
My last plea to you and the board is, please consider and discuss with government before opening a QIP for capital reduction by buying back equity and converting to preference share or tier 1 bonds or any other form rather than issuing a QIP.
Okay.
Thanks a lot and all the best, sir.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Shri A.S. Rajiv for closing comments. Thank you, and over to you, sir.
Okay. Sir, I am Vijay Kumar, Executive Director on behalf of the entire top management in the presence of our MD and CEO, Sri Rajiv sir, and my colleague, Executive Director, Mr. Ashish Pandey and our senior management, all the general managers. On behalf of the Bank of Maharashtra, Mala Bank Parivar, we convey sincere thanks to all the financial analysts and valuable investors and market observers and consultants for your valuable inputs. A lot of inputs you have given, a lot of thought process you have gone through our analysis. Thanks for analyzing in depth of our financials. And our MD sir always used to say that we should always accept the criticism, then only we'll grow. And we take all your observation in a positive note, and in coming days will be more meaningful, and we'll be able to show better results in coming days. And we also, in the press release also we said in one of the press reporters we asked that we always look for a growth with stability, growth with sustainability, and growth with compliance. This is what I would like to say. Once again, thank you very much on behalf of Bank of Maharashtra for joining us this call. Good day to you.
Thank you. Ladies and gentlemen, on behalf of Bank of Maharashtra, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
Thank you.